Hello everyone, welcome to Momentum Lab. I'm Shekhar, and this is day 97 of my Momentum investment journey building it in public. Uh, this is a weekly review, and in weekly review, just like I do, I talk about the markets, how are they performing, and I'll also show how my portfolio is performing. I also used to talk about how the stocks that I hold are also doing by showing the charts. But of late, there has been a SEBI guideline that influencers should not talk about stocks and discuss it in public. So maintaining that stance, I'll refrain from discussing any stock specific uh, information, and I'll not be sharing the charts of the stocks that I hold. But anyone who wants to look at the charts, the portfolio is always open, and you can click on that Google Sheet link, and you can access the charts, and you can open trading view and see how the charts are moving performing. And more or less, if you see in my old videos, I've already given a couple of pointers of how to analyze a stock or a chart by comparing it with its key moving averages and seeing the candles, how are the candles shaping up, and trying to identify if there are any patterns, and also seeing what kind of structure it is making, whether it is making higher high, higher low, or is it range bound, or is it downward. These simple chart trading techniques should be enough, sufficient. If you delve deeper into technical, then it only add it will only cause paralysis with the over analysis. And that's that. So let's move on to see how my portfolio has performed and also see how the stocks, how the market is doing, or the stocks. Let me share my screen. So as you can see, we hit an all-time high in my portfolio. It's now at 114.63. My NAV is at 114.63. And the net profit that I have accumulated as on today is 14.73%. I'm recording this video on 7th of July, which is Sunday. So it has been 97 days since I had invested. So in this 97 days, I've made a profit of around 14.5%. So that's been the journey so far. And if you look at the NAV, this was the trend of my NAV. If someone who has noticed my portfolio over a couple of last weeks, they could have easily identified that it was undergoing a VCP kind of a pattern. The NAV itself was undergoing a VCP kind of a pattern after the election fallout. Once the election results have announced, it took a massive beating and it tried to reclaim, but it didn't. It could not make an all-time high. I mean, since then it was coiling in a very tight range, and this tight range was slowly moving upwards, showing that the trend is towards the up. Even I was having a positive bias that this might break out, and it did, especially on Thursday and Friday. And this was predominantly by only two stocks, which actually led this massive NAV change. One stock is from defense, the other stock is in railways related. Both are PSU stocks. These two stocks, which moved by more than 15% respectively, and hence pulled the NAV massively. And not only did they pull my overall portfolio's performance, but they've also comprehensively beaten the index also, because the index is just an amalgamation of all the stocks, right? Now, if you are holding the true winners, then the outperformance clearly shows between the strategy and the index, because even if you have the stocks within the index, the other duds or the slow moving ones will dampen the index performance. So that's what has happened. If you see the NAV of Nifty 200, which is in red color, it was flat, whereas the strategies, my strategies NAV, which is in blue color, it has moved up over the last 2 days, last two trading days, especially Thursday and Friday. I hope this continues so that we make new highs. Now we've got a decent lead in terms of alpha. The alpha is at 3.71. So if someone has invested on April 1 in Nifty 200, their money would be at 110.93 or 111. Whereas following the studies that I am doing right now, it would have been at 114.6. So the difference is what we call as alpha. This alpha is net of all the transaction charges, all the realized gains or losses, plus the dividends that I have. So if you guys see the equity curve, this equity curve captures all these elements. So as on today, this is the unrealized profit, meaning the stocks that I'm holding right now in my portfolio. If I sell at this point of time, this is the amount of money that I'm going to get. And these minus 11K is the transaction costs that I've incurred. Whenever I make any purchase or sell any stock, I'll have to pay STT, transaction charges, brokerage, etc. Right? So that is this amount. This amount will keep on increasing. Whether I sell, whether I buy, whether I make profit, whether I don't make profit, transaction cost will always keep on increasing. And this is realized profit. Realized profit is whenever I sell a stock because it has breached my 20% rule from 52-week high, or it has breached the worst rank held. In either of the case, when I sell the stock, whether it is a profit or a loss, I'll have to book it. And over a period of time, all such exits accumulate and they contribute to a realized profit or a realized loss. It right now the realized profit is minus 29K. So meaning that so far whatever exits that I had done, they have net resulted me in a loss of minus 30K. So I'll take this also into consideration to calculate my NAV or equity curve. Plus whatever dividends that I've received so far, I'll add these dividends also. When you combine all these four, that's what is the equity curve in actual rupee terms. And if you normalize it and bring it to a base of 100, that's what the NAV is. So the NAV right now is at 114.63. Let's see how the next week shapes up. As of now, I think looks good. So that's it about the portfolio, and the XIRR is at 105.7. It's a massive number, but nothing to make any sense because we're only 100 days. I think when we hit 100 days in 3 more days, I'll do a separate video just to see how we have performed in this 100 days. And in this 100 days journey, the maximum drawdown that I've seen in terms of my portfolio was minus 12.75. So this is the max drawdown. That is the distance between the max high and the min low that my portfolio has hit. That's called as the maximum drawdown. Now with this as the portfolio summary, let's go ahead and see what the markets are doing. So I'll cover the markets by market cap price. Let's start with Nifty. So as you guys know, the dark blue is 20-day moving average. The teal color one or green color one is 50-day. Black is 100 and red is 200-day moving average. When you see all the moving averages one below the other in a proper format, and also the stock price or the Nifty index price above these moving averages, then we call it as a proper order. So that's one check that I see if the markets are in proper order or not. The proper order means that there's a clear uptrend, or you can loosely term it as there is an absolute momentum of this particular index. The second thing is that we'll also see what kind of structure it is making, whether it is making higher high and higher low kind of a pattern. Yes, it is making. So Nifty 50 looks good. Nifty next 50 also looks good, like a small base kind of formation, and then it made a breakout from this. And then the other market caps are also really good. Even the micro cap is good. It is broken out of the small base, and then small cap is also good. Mid cap is also good. Overall, it looks like a proper, we're in a proper bull market. As of now, nothing looks bad. Even gold is also breaking out. That's something that is also puzzling, equally puzzling. But I think there have been a lot of instances in the earlier also where both Nifty and gold have risen together. It's not that they always are uncorrelated and they always move in opposite directions. They do move in opposite direction, especially when there's a flow of money happening between one asset to another asset. But in general, if the trend is upwards, both do move together at a different pace. Now that's about these market caps. Mostly the market caps are doing really good. Now let's try to see that, because most of the people who are watching the markets closely, they might be noticing that is this a top, or are we at all-time high and should we book profits? If you're a momentum investor, then usually you should be appreciating index making all-time highs, because if a stock is making an all-time high, it has higher probability to go even further up. So there's a very good research paper done by Mr. Rajan Raju on the 52-week high effect. So I'll share that research paper also with you guys in this description. Please go ahead and read through it. So in fact, a 52-week high stock has a better performance than the high momentum stocks. So that's what they have come up with in that research and presented. So if looking at all these parameters, there should be nothing to worry out. I'll also quickly show the index, which is my favorite, that is Nifty 200, because from this I take as a universe of all the stocks and pick the top 15 stocks. So if you've been noticing my stance, I've been saying that the Nifty 200 was in a range bound manner for almost 6 months, since 19th or mid of December till mid of June. Now, after this 6 months travel in this channel, upward channel, parallel channel, it has broken out after the election results were announced, after 3 or 4 days once the government has been formed. And after that, it made a top and it retested this. It retested this channel. You can see that it took a support from this channel and it went up. That indicated that it has successfully finally come out of this channel and shown a bullish behavior. And then the 21-day EMA has now come out of this channel. So now the bias is clearly towards the upside. And the candles have been making so far are solid green candles. So as of now, if you see, it's in a good positive way. These stocks are making all-time highs. Now, when should we worry? Does a stock making an all-time high or index making an all-time high is a cause or a sign to worry? That we can infer to what we call as a market breadth indicator. There are different types of market breadth indicators. A simple market breadth indicator is where you plot the number of stocks which are above 200-day EMA. If greater number of stocks are about 200-day EMA, then you see that there's a widespread market participation. If greater number of stocks are less than 200-day EMA, then it means that most of these stocks are beaten down and the market is in downtrend. If the percentage of stocks which is hovering in between, let's say 50, 60, or 40%, it means that it's a side or the market is undecisive. Now we see that if greater number of stocks are above the 200-day EMA, what I'll do is I'll calculate the percentage of stocks which are above 200 EMA. So if we have 200 stocks, and out of the 200 stocks, if 190 or 180 stocks are above 200 EMA, then we say 90% of the stocks are above the 200 EMA and it's in a positive bias. And just by having a number which is close to, let's say, 90% or 100%, again, doesn't mean that it's a top. To show that, I will first show you a small market breadth indicator that I've built. This Python code access I'll share. I'll put it in the YouTube description. So what it does is on y-axis, it plots what is the percentage of stocks which are above 200-day EMA. Now this, I've taken last 10 years of data. Now during COVID crash, you can see that it has fallen down to a abysmal number of 5%. Only 5% of the stocks are about 200 EMA. This is a very good investment opportunities in long term if someone wants to. But right now, looking at this scenario, we are at this level. Right now, we have 93% of the stocks above 200-day EMA. Does this mean a top? We don't know. But it doesn't say that just by having greater number of stocks above 200 EMA, that it's a top. Let's take a look at what has happened in 2020 to 2021. After 2020 crash, the markets went an all-time high and many of the stocks participated in that rally. It was a secular run, meaning all the stocks participated and hence from only 5% stocks above 200 EMA, it went to almost up to 98% of the stocks above 100 EMA by the end of 2020 or the start of 2021. Now let's see what has happened with Nifty 200 as on 2021 Jan. So you see, this is the 2021 Jan at these levels. When we saw that the market breadth indicator was at its all-time high, even from that level, the index even moved further up by another 30% for the next 1 year. And we'll see what has happened to the market breadth indicator. The market breadth indicator stayed in this range for 1 good year before starting to fall down. So just the virtue of market breadth indicator being in all-time highs or the index making an all-time high is not a precursor that it will start to fall from there. It can still go even further because no one knows the irrationality, the level of irrationality of any bull market. So as we do not know how long it will go further, so it is premature to call that it is a top unless we've actually seen a top. But does the market breadth indicator predict in any way of topping out? Again, it doesn't predict because the stocks staying above 200 EMA can continue for a longer period of time. Meaning the market breadth indicator being range bound, it means that there is a sector rotation happening or a stock rotation is happening. When one or a couple of stocks are falling down, then some other stocks are rising up. Thereby, the index is rising, but the market breadth indicator is flat at those levels. And that sector rotation can happen as long as it can. We don't know when it will stop. And the sector rotation is happening, stocks are moving, changing leadership from one to another, then the market can continue to move further and further up. This I just demonstrated what has happened in 2021 to 2022. Even after 1 good year of bull run, again the bull run continued for 1 more year. Same thing if you notice, if you run this code for 2004 to 2014, you'll also notice that a similar thing had happened between 2003 to 2006. 3 good years, the market breadth was above the 75 or 80 levels. When I say market breadth, the percentage of stocks about 200 EMA. and the market index continue to rise further up and up. So that's what is happening right now. And if someone who's interested to actually see this market breadth indicator within this trading view, let me know. I'll try to create a Pine script and share that. There are already some Pine script indicators available in trading view, but if someone is interested, please let me know in the comments. I'll create a trading view indicator and share that. So when you combine this market breadth indicator with the market index, then you get a clear or better picture of understanding of what's happening in the market.